Hey, Anne Marie.
Hey,
Looks
can you
like
hear
you.
me?
Yes, I can hear you. Can you hear me?
Yes, very well. Very well.
Awesome. Awesome. Well, since we're all here, we might as well get the party started, right?
Absolutely.
And how are you? You're still in Hawaii, right?
I am. I am. One more week.
Awesome. Awesome. Well, that
Yeah.
that sounds amazing. And yeah, I was just telling everybody as we were getting ready for today's session that that you had this outline of the overall market,
Yes.
some key levels to pay attention to this week. I told them that I'm in on the wheat trade, but I missed the Tesla trade
Oh,
from Friday. That was such a golden opportunity there.
you know
Um,
what? There are going to be more.
absolutely,
Yeah.
absolutely. Um, and so I know who you are. I know all of your trading, a lot of your trading experience, but a lot of other people don't. So I'll just go ahead and stop sharing my screen. And then if you just want to introduce yourself, your trading journey, and then we can dig into today's session.
Absolutely. Absolutely. And it's great to see your smiling face on a happy Monday. Today is Monday, yes? Yes.
Yep.
Losing track of the day sometimes, but we're all good. Again, my name is Anne Marie Band. I've been trading for about 20 years. It's been a long journey, but it's been a great journey. And it's been a hard journey. And so, one of my main goals was to connect with great folks like Benzinga as trading continued to go on its upward track, like it has for me, and share with others. And so, after 20 years and just about every single mistake that a person can make, besides going all in on margin, I have avoided that one. Um, I'm here to share with you a little bit about my journey. And so, my philosophy when I first came into the market, I thought I was a pretty smart person. And turns out I found out that the market is always smarter. And so, one of the hello from Zurich, that's fantastic. Um, Switzerland's on my bucket list, so I'll be there in the upcoming years. So one of the things that I wanted to share with you is that when I first began, I thought about things a little bit too much in a space of complexity. And I had to step back and go, all right, what really is trading all about? And trading is about watching how people look at the markets and then position based on what they think. And so, if you look at it that way, it becomes a picture of the human element as it relates to money and making money. So, interestingly enough, money is one of those things that hits us very viscerally. All of us get very emotionally entrenched with money. It's just one of those things that is all about. And hello to everyone as you continue to come in and say hi. I'm so happy to see everybody taking your time to come in on a day like today. But what I want you to realize is that we're going to learn techniques, but at every point of the day, you're going to face an emotional battle. And that emotional battle will be, will I get in? Will I get in and be wrong? Will I get in and be right, but too small in my position? Will I get in and be wrong and too big in my position? And so at any time, as soon as we see a trade and we go, I'm going to position, we actually have an emotional attachment to the outcome. So one of the things we can't do is take emotion out of the trade. So, what I wanted to do today was talk to you about how I build an option space and how I look for positions in the market. And I'm going to do it from the simple premise of let's see what the market is doing. And so, one of the things that I did, and I'm going to first move my Benzinga over here. And then I want to share my screen. And I'm going to share the screen there. And I guess I'll put myself on the smaller end of that. So the trades I'm going to put in here, they look sort of wonky right there on the left-hand side under the Anne-Marie Band trades. But if you click on it once, it's going to open up in the center of your screen, and it's going to tell you BTO or STO. So BTO is buy to open. Sometimes it's just buy open and then sell open. So sometimes, like if you're on a Robinhood account, you'll see it just says sell open or buy open. But for me, I try to use as many words as possible to get this moving simply. So our first trade was the long put spread for Tesla expiring in July. Now, interestingly,
sorry,
go
Anne-Marie,
ahead.
is it possible to zoom in on your browser at all by chance?
Yeah, let's see. Let's do it. I got one better. Let's use the old Snagit. Let's see if she opens up for us here. Yeah. And I'm going to do that. And I'm going to snag it. And I'm going to say save as Tesla. And then I'm going to go to quick view. Whoopsie. I know that's tiny over there, so we're going to open that up nice and big. Let's zoom it in. All right. How about that?
Perfect.
Yeah. So what it tells us is to go out to July's and buy that 675 put. And we want to sell the 665. Now, when I put this trade on, Tesla was about 730, maybe even 750, something like that. So Tesla fell off a cliff. Now, the why is, why did you pick this trade, Anne-Marie? So I picked the trade, and I'm going to show you why, just looking at the chart, because my thought was, how do I help folks understand the power of the option? And for me, the way I found the power of the option was by looking at the stock. And so that's really what we're going to do, because I try to do things very simply. I do work out the back ends for delta and theta, and sometimes we do vega and gamma, but I don't introduce that to us when we're setting these trades out, because it's not really necessary for you to understand those underpinnings at this point. You want to strive towards that at some juncture, but right now you're just learning how to do these particular trades. So we had two of them. The first one we had was this one, which is a long put spread, and it's 675 to 665. So it's 10 points wide between this buying of this one and the selling of this one. Now, if you remember last time, when we buy an option, it creates a right. And that right allows us to execute or exercise that option at any time we desire. Okay, so what we want to do is figure out a time that desiring to do that makes the most sense. When we sell an option, it creates an obligation. So we are required to sell it. We are required to buy it. The obligation to buy a put is what that obligation is. When we sell a put, we are obligated to buy. Okay, so when we buy the put, we have the desire to execute. And when we sell the put, we have the requirement to buy that put. Okay, so in this case, it costs us $3.93, and we're going to look at the chains and see how that particular position looks like now, and maybe what we can do to amend it if we want to take some profit. Notice there are only two of them here. I am suspecting that the market takes a nice bounce. If it can get up and stay up over 39.50 in the futures, we want it to really get up over 400 in the SPY. And if it does that, it'll run for a little bit. It'll give us an opportunity to buy more Tesla puts, because Tesla is overvalued right now. And it's overvalued because the market is repricing risk. All right, so let's be done with that. Let's go back to here. And this is the second trade that we had. That is a short call spread. I'm going to do the same thing. Now, both of these positions are bearish. The long put spread buys a strike and then sells a strike. The short call spread sells a strike and then buys the strike. Okay, so let me do the same thing and we'll do our little magic here. All right, we'll go back here. Open this. And now, so now let's take a look at this. This is a short call spread, but it's also bearish, right? The long put spread is because I want price to go down, and the short call spread is also because I want price to go down. The difference is what's at risk. So this one really leaked out. We had a really good move on both of these options because of price. We'll look at that in a minute. But notice we are selling to open first, and we're selling the 770 calls. Remember, when we sell an option, we create an obligation. And so we are obliged to react with this call, right? We are obliged to sell it at 770. Now, an obligation of a call means we have to sell it. The obligation of a put says we have to buy it. And that means we have to buy it if we come to expiration and we still have the obligation on our books. So still the 10 points wide, just like the put spread. Okay. And so we sell to open the calls, we buy to open the calls, and it gives us $3.85 of credit. Now, the difference between this call spread and the put spread, which, sorry, I don't have them on the screen at the same time, is one of them clearly defines all the risk we're going to take. That's 393 for the long puts. But the short calls open up a different kind of risk for us. This, when it says a credit, it means the money goes into your account. And when the money goes into your account, you're actually able to use it as cash. This is other people's money, right? This is the term I say, hey, listen, you want to use other people's money in the market when you can. And anytime you sell an option, that's what you're doing. You're using other people's money to give you greater leverage in the marketplace. Now, this is $10 wide, and you're getting a $3.85 credit. That means if this trade goes wrong and you hold it to expiration, you are going to have on your books a $6.15 loss on this particular spread. Okay? So the question is, why is the loss so much higher if I'm looking at a credit spread versus a debit spread? And the lovely thing is this. Credit spreads, when they're properly positioned, will allow us to leak theta. Now, what theta is time decay. When somebody buys an option, if I buy a put, it tells me, hey, you get time for this trade to work out. Well, time costs money, right? If you've ever heard that, time is money, your dad might have said it, you might say it. Time is money. And so it happens in the markets, and particularly in the option chains, you must pay for time. And that's why people say, hey, go this far out. You want to give the trade time to work. And that's something very, very important. The closer you are to expiration, the less time you have for something to work. So the more right you have to be. Okay? So we get $385 credit here. That goes into our account. It opens up a $615 exposure. But time decay is always on our side. So let's take a look at what's going on with Tesla. And we're going to use my Thinkorswim platform because I don't want to drive too much resources in the wrong direction. The markets are doing really very nicely, exactly what I suspect should happen at this juncture. Okay, we washed out a ton of people, and I want to show you why. This is a futures chart, but we're going to go to a monthly chart, and we're going to see what happened last week, Friday. And what happened last week, Friday, is that this moving average of 30, it's not really important that it's a 30. It could have been a 20, could have been a 50. The fact of the matter is it's got an upward slope, okay? And if you look all the way to the left, you'll notice that in February, we spent 1, 2, 3 months right around this 3,800 number. And that 3,800 number became extremely important from a support zone perspective. All right. And you're going to see that across the board. If we look at SPY, you're going to see the same thing occurring, right? Let me delete these lines, clear my drawing set. All right. You're going to see over here, we spent 3 months, 1, 2, 3 months, really almost 4 if we count the top of this, just dancing around this number. Everybody said, hey, listen, that's the breakout ledge. We know from the options flow report that Benzinga sends us that that is a great thing. If you want to come up to speed on that, let me show you what it looks like. You sign up for it. Is this it? Options flow report, right? Look at what it says right here. This is from Bloomberg. They collect some wonderful things for us. Analytics suggests the rally to end the last 2 hours of trading for the week were traders closing deep in the money put, which released the short share hedges from the dealers, allowing the market to rally. What does that mean? People are covering their positions. And remember, if you have a deep in the money put that is long or short, and you come into expiration, you want to either close it or you have to take delivery, which you don't want to take delivery on a hedged product like the ES because that's all it is. It's a hedge. So you can't really do that sort of thing. So when they are looking at this, Bloomberg says, hey, listen, market rallies are an opportunity to sell at a better price with thin liquidity. So we have that as a backdrop and we go, well, you know, what does that even mean? It means that they've come into this area. The people who were long the puts are collecting all of their money by selling these puts. And when they sell the puts, they collect all the premium because they bought them and they expected the market to go down. Now they're clearing off their books. The folks who were deep in the money that had to buy puts to get out of their position also shifted the market, and it allowed everybody to clear off their edges. So this, they're trying to tell us, is a technical bounce coming in to options expiration. Okay, so what does a technical bounce look like? Well, it's going to come into particular levels. And so here's the first level that it's dancing around today, this 397-ish zone. It needs to get up over 400. If it gets up over 400, it's going to go to 411. You can count on that. So here's the question. What does get up over 400 mean? And how can I use that in the options market? As we come together, and if you join me consistently in these webinars that we have together, you're going to learn a lot about how the option chains move according to this kind of motion. So we're going to look at something super interesting today as we come into, I've left my computer on Eastern time. So now we're coming into that 2:30 space. It's going to be just fantastic for us to watch. So once it shifts to that area, I'm going to go to the option chains and show you something. So this is what I've been doing. Now let's hop to Tesla. Right? So have a look. Tesla had a monster fade, and it actually is still in the midst of a monster fade. So the question is, why pick Tesla? And you know what? I'm going to clear this Fibonacci off because it's annoying me. All right. So why pick Tesla? Well, first of all, Tesla's valuations are so big that they really have to operate perfectly to move around in an environment like this that tells us that we need to reprice risk. And so the question then becomes, how do you get to that? Well, if you want to go to technical valuations, in markets where risk is being repriced, which is coming right now, why? Because inflation, because the Fed's raising rates to manage that, because we have thin liquidity, all of these things. Anytime you read thin liquidity, think to yourself, I better not buy something that's overpriced. And Tesla, now if you love Tesla, you're going to feel like, okay, maybe Tesla's not overpriced, but if you're just looking at it as a stock and you're looking at how people are interacting with it, you're going to look at something and you're going to go, holy cow, that looks bad. So what do you want to look at? You want to look at a moving average. So the one that I have here is the 7. I actually prefer looking at the 6, sometimes the 5 if it's not too noisy. Tesla's a little bit noisy, so I'm going to leave it on a 6. And so here's the first thing I say to myself. All right, I want to put an option on. The first thing I'm going to go for is I'm going to look at the monthly chart and I'm going to say, are my candles underneath my moving average, my 6, my 5, whatever? If the answer is yes, then I'm going to say, is the slope of that moving average down? Now, here, you're going to see, wow, sorry, got all these alerts going off. Here, you're going to see the answer is yes, it's under my moving average. But the answer is no if I ask if the moving average is down. You have to have yes for both of those answers. So if it's no, then what you do is you look to the left and you find support. Okay? Here, both answers are yes. So now I go to my weekly chart and I ask the same question. Am I sitting underneath that moving average? And is that moving average down? Both of them? Yes. So now I have agreement on the monthly chart and I have agreement on the weekly chart. Simple question. Am I under my tight moving average? Again, you can use a 5 or 6. And when I'm under there, is it sloping downward? So the answer is yes. Now let's go to the day. Okay. And again, the answer is yes. So when did we have this discussion last? I don't remember. It might have been, I don't know, was it 7 days ago that we met? I can't even remember. It might have been 7 days ago.
Yeah, it was. It was about a week ago.
Yeah. So if we look at 7 days ago, that's 5 trading days. 1, 2, 3, 4, 5. Here we are. My answers were yes, I'm under the daily. Yes, I'm under the weekly. Yes, I'm under the monthly. Perfect trade to buy a long put spread or a short call spread. Now we have to choose the strike, right? And so for me, I like to look back at that monthly chart. And I like to say, okay, where do I think price action is going to go? So if you will note, where are we here? Oh, shucks, I erased it. Too bad. Let's go over here. Benzinga. All right, that is, let's go back to the put spread. So on the put spread, the numbers are 675 to 665. So let's go back here, 675, 665. Remember, it was all the way up here when we were chatting, right? So some people might go, oh, wow, I don't know about that. That might bounce right there. But see, that's not what I'm using to tell me. What I'm using is the actual flow of what people are saying when they're staring down the chart. And if I go to the monthly, the weekly, and the daily, and I'm always sitting under that moving average, and that moving average is down, Bob's your uncle. Easy peasy. That's all you're going to do. So now you want to understand how I pick the strike. It's got to do with, wait, where are we likely to go? And what can we do? So I'm going to go over here to congestion, and I'm going to say, you know what? We're probably going to head over here to this 675 area. And we're probably going to head down here to the 650. But I would love that strike to be completely in the money so we can collect everything that we want to. So I'm just going to keep watching for my price action to do its thing, but I'm going to choose the 665 for the lower end and the 675. Now, I could have chosen 675 to 655, but then the option would be more expensive. So let's go over here and we're going to look at Tesla. And here's my butterfly, 675 to 665. That's going for 470. So let me take some snapshots and we'll move them up. Here is July. All right. And what I want to do, nope, that is that's the diagonal. Here are 2 verticals. Perfect. All right, now let me take a snapshot of it. And then we're going to expand. And what our delta is looking like right now. Snapshot. Save as. And now I'm going to go here. Let's open this. And now we're going to expand it. All right, so here's what we're looking at. We initially sold the long put spread, 675 to 665. You get to see, I just look for congestion. So that's how I'm leading you down that right path to get things in the right space. We sold this one for $393, and we bought this one for $387. We sold this one for $393. I can't remember those close numbers. You got them right now in the live market as we trade right now. This one is up about $1, and this one is up about $1. So literally, these two positions in 5 trading days, if we closed it out right now, we'd make about 30% profit, which is fantastic, right? So our goal is not to swing for the fences. And think about this. If every trade that you went into made you somewhere between 30 and 50%, how well would you be doing? And so I'm going to answer that for me. If I could take the worst 20 trades off of my books and come back into the market, my account size would literally be 5 times the size as it is now. So what does that really mean? What that means is when I first began trading, and I lost millions of dollars, millions of dollars. When I first began trading, I did not understand risk. And I also, because I kept watching things either popping up on my videos that said, hey, I made 4,000% here and XYZ, all of those crazy things that you hear that make you go, oh, how can I do that? That is not how this game is won. And I am just telling you flat out, if you want to get good at this game and be a gray hair like me, still doing it and still building your account size, you've got to manage your risk, and you have to understand what kind of profit is reasonable, okay? And reasonable is not what you're going to see on the airwaves, okay? Now, that's the first thing. Now, am I saying every single trade you're going to do with me is going to make you 30 to 50%? Of course not. I am not a soothsayer, although I really wish I was. I make mistakes, and these are my trades. So when I take them, you're taking them, right? I am always sitting in these positions in one way or another because I want to focus on what I want to focus on. And so the only way I do this sort of stuff is, how can I let it not take away from what I'm doing for myself, right? Then I get to share with others what's going on. I get to reconfirm my own theses, and everybody gets to grow along at the same time. It simply is a win-win for all of us because I just do not have the time to focus on things that aren't trying to make me money in the first place. Okay, so this is what we are looking at. It's up about 30% in 5 trading days. Now, here's what's going to likely happen. If Tesla stays where it is right now, let's talk about the difference between calls and puts. If Tesla stays right where it is at the price it is right now, and it goes all the way to July, the only position that will make money here is the call spread. And that's the magic of selling a call option. Now, here's my personal philosophy. If I am sitting underneath a moving average on my monthly and my weekly, I'm going to be great to sell call spreads, but not to sell put spreads. Why? Selling put spreads when I am underneath my moving average opens me to much higher probabilities of my trade going wrong over time. So I am sitting in the direction of trend with the short call, and delta will simply leak away as I am very far from this number, 770 to 780, right? So this one is a fairly nice shoe-in for us. So we're going to leave that one sitting where it is. For the 675 to 665, what we have to begin to watch is what is price action telling us that these charts will do. Now, I won't say it won't make money because it is 671 right now, and we have the long put at 675. So we'll make about $3.70, but that's how much we paid for it. That's what I meant when I said, hey, listen, we're not going to make any money. We're going to be flat on this position if that happens for us. So the thought process is, all right, let's see how much Tesla will bounce here into that motion and see if it will fade some more. My thought is that Tesla is going to continue to fade. They're going to have folks that are going to bounce again. I'm going to reinitiate another long put spread on the bounce between now and sometime in June. So you can watch for that also. All right. So now let's look at the wheat trade. Okay. So wheat is still parabolic, and wheat. Listen, soft commodities are going to stay parabolic. I hear people saying all the time, don't you think it's overdone? Wait till a loaf of bread costs $35 and people are rioting in the street. Okay, that was the reason for the Arab Spring. They had no food. And so that's what caused the Arab Spring. And if people don't have food, they're going to riot in the street. All of North Africa, half of the middle of Africa, they get all their wheat from the breadbasket, which is Ukraine. And so they aren't planting. We're going to have trouble here. Okay. So another one I'm going to be putting a trade on for us is DBA. We're going to look at that very quickly. Going to see how that one's going. You can see that it's sort of topping out in this space, but let's go back to our wheat. Still time for this trade here, right? And so if we go onto our Benzinga platform and we go to the wheat trade, here we go. We have a spread. It's the buy to open the 12 and the sell to open the 15. So let me spread this out a little bit and I'll take a snapshot, right? And I think what I'll do instead of doing this, I'm just going to write it out here and then, because it's just not coming out very pretty there on the, okay, so, all right. So here we go. Going to open this up again. And then we're going to probably stop in about 10 minutes and cover some questions.
Really quick, Don was asking if you closed out on Friday when Tesla was at $638, wouldn't you have almost maxed out your profit on the spread?
No. And the reason is, that's an excellent question. So the reason that doesn't happen, Don was the person that asked it?
Yes.
A person, yes. The reason that doesn't happen, Don, is because of the time between now and expiration. See, an option moves on a very complex ribbon, and that complex ribbon matches things like gamma, which is the speed of delta. It moves on things like theta, which has a specific amount of time decay built into the price of that option. So even if you did that, it was only going for about, I looked at it right to the end, I think it might have been 502. The reason that it doesn't do that, doesn't max out your profit, is because the option has to go all the way until July. So there's part of time that will never evaporate until time evaporates. And see, if you said, hey, I can close it out on Friday where I maxed out my profit, the person who sold it for time decay, remember, there's somebody on the other side of your trade. And so the person that sold it for time decay is going to go, wait a second, I have all this time decay. Where's that going? And so the complexity of time decay does not allow you to max it out, unfortunately, unless the option were expiring on Friday. Then it'd be a whole different can of worms. Well, I wouldn't say a can of worms. It would be a can of butterflies and puppies for us, as it were. So only when it comes into expiration. But see, I never hold things until they go to expiration, unless it's like a penny and I don't want to pay for the option. But a lot of platforms will allow you to close your option position without cost if to close it is less than 3 pennies. I don't know if they've changed that rule since they sell flow now, but I can't remember. But that would be the only reason. I always close it early because a bird in the hand is worth 2 in the bush. And of course, that's because I'm an old lady, I get to use those old things that we hear our grandmothers say. So yeah, I always take my profit when it's sitting on the floor and I go, oh, look, there's $100. I'm going to take the money. All right, so now let's take a peek at wheat. And let's open this up. Okay, so my goal, I try to say, hey, why is it we're looking at here? We're looking here because the soft commodity complex is going to rise. That doesn't mean it won't fall. See, when I bought wheat, it was at 1201 and it actually faded fairly savagely, right? So now it's sitting at 1190 something, right? So I buy to open the strike at 12. Remember, buying an option gives us the right to do something. And if we buy a call, it gives us the right to buy. If we buy a put, it gives us the right to sell. Okay, so I sell the strike at $15, which gives me the obligation to sell the stock at $15, right? So if I sell a call, it gives me the obligation to sell the stock. But if I sell a put, it gives me the obligation to buy the stock. This is why we don't want to sell put spreads when all our prices are sitting underneath the moving average, because it tells us that the power of the market is moving down. And we do not want to be part of short put spreads, of short put spreads, and particularly of short puts. If we're sitting underneath these tight moving averages, it means we are moving counter trend to flow. It could work, but we don't want to look at what could work. We want to look at what's most likely to work. And so I bought 5 of these in October, giving it a ton of time at $12, and I sold 5 of them at $15. So the question might be, why don't you just want to buy them outright at 12? And my answer is, I always want to use somebody else's money. If I had just bought the 12 for October, I would have paid 148 to 178. I can't quite remember. I'm paying less than half of that to essentially get into a position that's going to give me a ton of room, because I don't really see the price action moving much past $15, although it could, and then we'll reassess. All right. So now I said, hey, I'm going to add to this trade if the price drops to 50 cents, and my stop is now 30 cents. So here's my question. How much do I have at risk? Okay, I paid $375 for 5 of these, and I'm going to sell them all at 30. So that's a 40-cent risk for each one of these. So my total risk is going to be $200 for this particular trade. All right. If I had bought 5 of the 12, my total risk would be, I don't know if we still want to, I don't know what you want the stop to be, right? But it could fade quite quickly, because if we're buying something in October, we're buying theta, right? Which is time decay. So again, I'm always selling some call or some put because I want to use somebody else's money. All right. So now let's go back to Thinkorswim and notice that wheat is now sitting at 11.92. So let's go back to that trade. We have it in October, the 12.15 spread. Notice 13, I don't know if you can see this, 13,950 calls, 2,000 puts. So we are sitting on the side of the broad players in the market. Okay, we're sitting on the broad side of those broad players. So now let's go to October and see the 12 today is 165. All right, the 15 is 80 cents to sell. And so our spread is up a nickel, even as prices come back in. And that's probably because of all this volume. So let me take another snapshot here so that you can see it. Again, my goal is, you're going to see, I'll show you what happens to delta also. My goal is always to get onto the side that the most players are sitting in. I mean the most. I always want to play, here's my thing. I love the underdog. I've always considered myself to be an underdog, right? I grew up in a family that we did not have much. We were immigrants. We came to the States, and everyone in my family is self-employed, right? We all have businesses. We just came and said, hey, listen, this is great. And when we were first starting out, none of us had a lot at all. If I didn't have scholarships, I could never have gone to college. So when I sit and I look at the market and understand how the market works, I'm always very conscious of this fact of other people's money need to be used to help you in the space. And so again, this is why I build these spreads, so we can take advantage of leverage that we see. So notice this 12.15 call spread is now at 80. Listen, the market's going to dip again. If you want to participate in this trade, you can set it out for 75 cents and wait for it. You put good till cancel at the end of your order, so it won't leave the queue. Some platforms will say, hey, you get 90 days to do that, and then we're going to let it expire on its own, whichever the case. Okay, so looking again, we buy the 12 and we sell the 15. That's really what's going on with the price action. And you can see over here, it has a 22 delta. And so as long as it stays under this 12, the price action, this number is going to be small. But as it increases, because we have a long call, when we have a long call, the smaller number is on top, the bigger number is on the bottom when we have a long call spread. When we have a short call spread, that smaller number is on top and the bigger number is on the bottom. Same thing, we're just flipping the buy and sell version. Okay, so for call spreads, you're going to have the smaller number on the top, the bigger number on the bottom. And it's going to look like that in Thinkorswim specifically. All right, so let's get back to the broad market. Let's see what SPY is doing. This is what I wanted to talk about. Okay, notice when we first started talking, I said, hey, listen, this number at 397 is going to be a problem. All right. And so since that time, the market's dropped about $1. All right. We're coming into the last hour of the day, and it's going to be a little slippery. So let's take a look at the different ways that you can trade options if you're looking at, wait, what could happen mostly? So have a look. Remember, this is the moving average I want to look at. All right. In my little thing here, and I should change it when I'm talking to us, but in my motion here, my blue candles are down and my white candles are up. This is my moving average. And what does it look like? I'm going to tell you. It's flat. It looks flat. How did I find this 397 number? I used a monthly chart to find it. So those really are the only numbers you want to watch. Where are my monthly charts? Go down to maybe your 4-hour, and you can find out where that heavy congestion might sit. And you can see the traders are saying, you know what? I don't know about going up any higher. On Wednesday, we have an FOMC meeting. The reason I don't want to put on any big positions between now and the FOMC is I don't know how the market's going to react to the FOMC doing its thing. Now, my thought is they're going to dip, and all we're doing is rebalancing a little bit of motion. So a particular trade that might work here is, remember I said, hey, 411 is going to give it a little bit of trouble, right? That's really far away from where it is right now. And we know that 380 is the low, but that was Friday. So, I mean, that's a really big motion. But we have options expiring in an hour and 10 minutes. So have a look. Here's something very interesting. I'm going to show this to you. Here's what happens to theta when you come into the end of a trading day where an option is going to expire. All right. So I'm going to take a couple of snapshots. The first one is for next week. No, not next week. Let's use Friday. No, let's use Friday. Friday is the 27th. All right. And I'm going to take a picture for you, and you're going to see what happens. And that's just a week. So these numbers get very, very small. If I want to, I better do this so I can actually show what happens to theta. See, when we go long an option, we buy theta, but theta slips away every single day. And so I'm going to just show you the theta from the put side, because that's the side I'm interested in. Save as theta. All right, we're going to expand this. So here's part of an option chain. This is the 396 put. And this number right over here, so it says negative 0.24. That means if you are long this option and price does nothing, and you bought this 395, every day it's going to lose $24. Every day until the expiration. And as it gets closer to expiration, it's going to start losing more. Okay? Now, this, let me show you what happens. Let me show you the option that's expiring today. And look at the flow there. So the reason we can use options that expire on days like today, and we'll be looking at a trade today, is that we can see that this theta starts moving at a tremendously fast speed. It was 24. Now, that same 396 same 396 over here. It's 73 cents for that option. But theta, look at the number that theta is. That's negative 73. That means if the price did absolutely nothing for the rest of the day, and you bought this option, every penny of it belongs to theta. Every penny of it. So what you have to think about when you're looking at these option spaces and you go, hey, I want to buy this, but I want it to expire in 3 days because my option's really cheap. What you're really buying anytime you're out of the money is time decay. You're buying the time for the option to do its thing. Okay, and that's what we want to be a little bit careful about. But let's have a peek and see what the chart can tell us. So here we are. It's 396.68. It's an hour to go before the market closes. What kind of trade could we do? All right. So what we're fairly sure of is that we have some trouble at 397. We also know that 4 days ago, 403 was an opening tick, and it doesn't really look like it's going to move up there in the next hour. All right. So we have two things that we can do. So here they are. If you think, hey, this is sideways, I'm probably going to move down. You have a thought, and you can go, all right, if I buy the 390 put, let's see how much that's going to cost me. Now remember, that's out of the money. A 390 put is out of the money. In the money would be down here where it's shaded. Out of the money is up here. It's 4 pennies. Okay? So here's how a trade like this would work. Your goal is not for it to come in all the way to 390. Your goal is, hey, can I turn this 4 pennies into 8 pennies? Now, a lot of people are doing that. Look at the volume. 269,000 of them. And when the day opened, there were only 12,156. I know you can't see those numbers. They're very small. But if you bought this 390 and you paid 4 cents for it, remember, it's going to cost you $1.50 or whatever they charge for options for you. It varies depending on what size of portfolio you have. Okay, so if you buy it and you expect it to go to 5 cents, then it's basically a wash. If you expect it to go to 15 cents, then it's something different. So if you anticipate the price action is going to move down into the afternoon, and you're willing to say, hey, listen, I'm going to risk this because I think we're moving in a range. If you think it's going to 390, you might be better off buying the 393 and watching your 14 cents go to 50 cents. Okay, this is a game that a lot of people play. Now, by the same token, a lot of them are selling this because it's very close to expiration. My thought is we're going to fade. So this 14 cents, it's already 15 cents now. This 14 cents option that we were looking at for the 393 calls is going to expand. So you want to play a little bit in this pool. You can go, hey, I'm going to buy those 15s and I'm going to sell them when they go to 25. Whichever the case, right? You could buy 2 of them at 393, or you could buy 1 at 394. You'd be spending about the same amount of money. But if it actually goes to 390, you're going to be in great shape, right? A lot of folks play these, and particularly I play this way when I'm really staring down the market space, expecting price action to do one thing or another. Now, if you think, hey, no, you just said things are going to bounce this week, price action is going to move higher, you can do the very same thing. Remember, I said 403 was Wednesday's opening range for the chart. And so you can look at that and say, you know what? If I look at 403, it's only a penny right now. I really don't want to go there. It doesn't have a delta that's big enough. But if I go to 399, then that's going to cost me 11 cents. And so $11. So you can practice in the option space, sitting right here with these tiny amounts that show you, hey, this is expiring today. You're going to have to sell this back in 30 minutes, right? 30, 40 minutes. You could buy both of them. That's actually called a strangle. If you bought both the call and the put, notice the 393 is now 11. These are very risky spaces. So you want to take small trades to figure out what's actually going to happen in the space, right? So from that perspective, easily you're able to see, hey, I'm thinking it's going to move from 13 cents on the call. I think it's going to move to 30 cents. Or I think it's going to move from, 393, 394 into XYZ, wherever it is. At the end of the day, these options, if you did nothing and the market did not move, you're going to lose everything. And that's very important to understand about trading these options. And that really is because all you're buying right now is theta and, of course, some gamma, but that's not particularly important right now. Okay, so let's answer a couple of questions. Jonathan?
All right. Let's see here. Well, Night for Humanity is saying, hey, you guys should do an Anne-Marie Grow Your 1K option account tab or stream. So I'm sure we have some people with smaller accounts here that can still use some of these trades, right? I mean, you don't have to have a huge account to do these. That's what's awesome about spreads is it limits the
That's
capital.
Exactly right. You can have a very small account and you just have to grow it with, remember, when you've got a small account, you've got to be careful with your money. You have to be careful with it because there's not a lot to lose. And that's why these spreads work as nicely as they do.
And then someone was asking what your weekly and monthly EMA indicators were.
They're all the same. I do not use an EMA. I use an SMA. And this one is six
So you,
simple moving average. And all I care about is the shape of it. All I care about is the shape of it and whether my price is above or below. I do not care about, ooh, I'm touching my moving average, I'm going to buy. No, because that's sort of making things too simple. And a lot of times what we try to do is make things too simple, and it really does gum up the works. You can't make it too simple. You have to make it simple enough, but not too simple that it breaks, right? And if you go, hey, I'm just going to buy it when it touches X, what does that mean? How is everyone behaving around the chart? We've got to realize that trading is about interacting with other human beings that can be frantic, fearful, greedy, or hopeless, lost, wherever they are. It's all the emotional motion. That's what happens when you see these wicks. That's what happens when you see great big candle bodies. And if we learn to look at the charts like, wait, if I just use this as a counter to take a look at what the ocean looks like out there, I can see that, yes, it's not a bad idea to buy this if it comes into this level, and not a bad idea to sell this if it comes into this level.
awesome. And Esther was asking, is it too late to trade your Tesla recommendation?
Okay, so let's have a peek at what's going to happen with Tesla. So let's do it like we would ordinarily have a setup, right? So the question is, what is the slope? It's downward, right? And I have a candlestick on the 4-hour that is above my downward formation. Now, it tells me that that bounce is going to push us potentially up into another area of old support. So my thought would be, yes, there is time for that Tesla trade, but don't put it on now. What you want to do is see if it'll come back and get you in this particular trade event right up here. Wait until the price action comes back into the 700 zone, and then you can take the trade. So, because I believe that Tesla is going to roll over. Now, if Kathy Woods is right in the short run, and this woman has a 15-year horizon, so I know a lot of people are really, everybody wants to kick somebody when they're down, and whatever. If she's right, and I am wrong about what's going to happen to the price of Delta in price of Tesla in the short term, that option spread is going to end up being worthless. But I do not believe I'm wrong, because market flow is telling me that I am correct. But market flow is also saying, listen, buyers are very keen on trying to recover this space. So my thought would be, for the people who have this trade, to close it out, which is what I'm going to do as soon as I get offline here with everyone. And then we're going to close out the long put side. We're not going to close out the short call side, because the chart will chop around in this range. So the long puts are going to come off, but we are going to reassess and put on a new trade, potentially by the next time we have our next webinar, which I think is Thursday. We might have a study session on Thursday together. Yeah. And so that is I know that was such a long answer for you. I'm sorry. But I want you to realize that when you start bouncing up over this moving average, it says, hang on, let's see where they're going. That's the beauty of the option. It gives you time to sit back and wait, which is, I love the power and control that options give us. It gives us the time to go, okay, let's wait and see what you're up for. Let's see what you're into. And It tells us that when we start printing above this moving average, that it's going to try and flesh out some kind of resistance. And my thought is that's all the way up here near 680, 690. And why not take the profit while we see it, and we'll institute a new trade.
Excellent. Israel is asking, what strategies do you use when there's high volume like these days, still long put verticals? Question mark.
Okay, so volume is very thin on days like today. We've had very thin global market volume. And that's because people are pulling their risk off the table. And so they're pulling their risk off the table because of supply chain issues, because of fear, because of what they believe everyone tells them the Fed is going to do, XYZ. For the long put options, I'm trying to understand the question. For the long put options, I would say we're going to wait until the market bounces into areas that I suspect are resistance, and then we're going to set up a new set of long put spreads in SPY, long put spreads in the Q, and we're going to pay for some of those with short call spreads. We're going to use other people's money to give our exposure the smallest amount that it can be while we participate in the market.
Thank you. So basically, we would wait for it to bounce a little bit.
Correct.
So that then we can get a better entry point on those long
exactly.
put spreads.
We want to pay. Yeah, we're waiting for things to go on sale.
Mm-hmm.
Yeah.
William says, I'm still missing how 15 to 20 cents ends up so costly. Maybe
Are
it's
you
the
missing?
fact that we're talking about that times 100.
Exactly. Or 1,000.
Right.
Right. And so it becomes a percentage. If I'm spending $15 and I'm looking at how much do I want this trade to cost me and what kind of risk am I putting on, if I'm willing to lose all of that, that's 100% risk. Right? Now, compared to your entire portfolio, it's much less than that. But you have to look at each trade in terms of saying, what's my global risk event? And so here's what you'd want to say. All right, if I am going to take a trade that has 100% risk associated with it, it better be about a 2% or 1% of my account. But what we have a tendency to do is think, hey, this is only $15. I could buy 20 of these and it would be $300. And, I could turn that into $600 and my account would be up 30% because I've got only $1,000 account, except if it goes belly up and then you're 30% down of your global account and you've lost 100% of what you put at risk. So all of these things, they matter. They really, really matter. And so what I want you to get accustomed to is how things sit on the curve, right? So some of the trades we'll do will be very action-packed and you'll be able to turn this to this, or this will turn into that if it doesn't end well. And so what we are going to look at is how options move in the market and how you can control risk, because that's the difference that makes the professional and the amateur. And you're never going to get professional big money results if you look at risk like an amateur.
That's quotable right there. Put that on a t-shirt. Um, and so, just in the interest of time, I know right now it's
Yes.
3:12 Eastern time, and we talked about doing a live trade today. So we've talked about some of those key levels. Is there anything? Should we move into that? Are you still feeling like the opportunity is ripe for a live trade?
So I don't. And the reason I don't is because the market is showing me that there's a bit of flux and counter pressure. So, how do I measure flux and counter pressure? So, the first thing is I want to look at the range that the moving averages tell me is what's going on, right? So, my suspicion, if you have to say, Anne Marie, tell me what's going on, I say this chart is going to fade, right? And it's going to fade because people have used this time to retrace motion, but then nobody's getting up over whatever this little price action here is. Now, let's say I'm wrong. If I'm wrong and I want to get out of a trade today, right? The trade I really want to get out of is our Tesla trade. Come on. All right, so that's moving around between 480 and 490. I don't know what it'll fill at. I have to get on my other platform here to close this one. So hang on. Let's see what we get.
But basically, you're not as confident. You think it'll fade, but basically, it's looking a little bit less sure.
It's a coin toss. So here's how I would go about thinking that. What is making me say, hey, it's a coin toss about whether it's going to fade? Well, first of all, here's my 4-hour candle that's closed at 1 p.m. Eastern. I'm sitting in this space and I'm sitting over the close of that candle. How do I know that? Because my next candlestick is white, right? And that's an upward candle. If I'm holding over the close of this, it means that buyers are saying, hey, I'm going to buy that close and I'm going to try and push price up. That's what they're trying to do. By the same token, there are folks up here that go, yeah, you might buy that, but you're not getting above 397. So have at it, right? And what we have here is also a limited amount of volume into the edge. So I have flat moving averages. Even my 30 is flat, right? And so if my 30 is flat, I don't have momentum. See, if I were coming into the edge of the day and my formation looked like this over here on the left, where I've got my cursor moving, it's a lot easier to go, hey, I'm going to sell. I'm going to sell a call. I'm going to buy a put because that's moving down. Towards the end of the day here, I've got a lot of sideways action. Even if I went to an hourly chart, I've got a ton, these are my tighter formations, I've got a ton of sideways action. Look, I can move up, but I can't move down. I can't move up, and I can't move down. And so if I'm looking at SPY and I want to say, hey, what's going to happen on Wednesday? If I'm looking at those options, they're going to be much more expensive in terms of time decay. So let's say you're thinking to yourself, all right, I hear you. It could move. What about Wednesday is going to look like? Well, because it hasn't moved over here, Wednesday, it could be down here or it could be up here. And so I would take a trade there, but it would be more complex. I would take a short iron condor, but I can't, we have to take our baby steps. So the short iron condor is really a short put spread. and a short call spread. And I would be okay using it for 2 days because I suspect the price action is going to be sideways. The next fly in the ointment is that Jerome Powell speaks on Wednesday. And if I've got an FOMC release, I don't really want to take something that's got me on a short spread, which widens my risk on either side of those, because I have no idea which way the market will go. So every day is not an ideal space. But I will tell you this. If I look at the price action tomorrow in the morning and it moves that way, that will pull in a little bit of volatility and allow me to go long on one of these edges, then I'm going to see about putting something in the queue. So just watch for my hashtag there for Anne-Marie Band Trades, and we'll see if something new pops up.
Yeah, and that's a good point. I mean, that's fair. And just, everyone, this is not a marketing trick. I didn't put live trade on here. Oh, bait and switch. No live trade for you. No, when Anne-Marie makes a trade, it's with her money. And so that's the value here is it's when that alert comes, that of course everyone is responsible for pulling their own trigger on the trades, but this is something that Anne-Marie really believes in enough to risk her own money in. And so that's what when you're looking at that chat room or the ideas tab on Benzinga Pro, that start it today and tomorrow morning there might be an alert. And then between now and Thursday when we have another video session, there'll probably, and between now and Thursday, the FOMC will meet, right? So there's a lot there inside of Benzinga Pro. And Anne-Marie, I was going to show them where to find that on
Sure.
Benzinga Pro, if that's
yes,
all right.
Please.
I'm just going
yes,
to...
absolutely.
Let's see here. Need to take the maximize screen off of here.
Okay, so I do want to tell you that I just closed this for $4.75. The Tesla trade. So while you take over, I'm going to, I'll be here in the background, but I'm going to put out a notice that says that this position has been closed. So I'm going to, you take over there, you'll be able to see me.
Perfect. So what we're in here is on Benzinga Pro, and there's a link in the chat, in the description, and I'll just go ahead and throw that link here too. And we're doing this only this week for Memorial Day, where you can get your first month of Benzinga Pro for $47, and then it'll go up on the second month. Or if you want to purchase for the entire year, I have a crazy deal on the annuals. You can reach out to me directly. And by the way, Anne-Marie, I don't know much about Thinkorswim exporting workspaces, but David and John on the chat were saying, oh, would Anne-Marie export and share her Thinkorswim workspace?
Absolutely, I will.
Awesome. So yeah, that's the link for the $47 for your first month, guys. I mean, you got the Tesla trade here. You've got I'm in wheat with an October expiration. And once you're in there, you can just scroll back and you can see some of these other trades that we've been doing. So definitely get in there, start using the tool, and hopefully we'll have another trade tomorrow morning. Let's see, I'm copying this over to the other chat, and we'll be good to go there for everyone. And yes, we are sending out a recording to everyone who registered for this, so you should get a recording today. And if you have any questions, you can reach out directly to me. Right here on Benzinga Pro, you have this blue bubble in the bottom right corner, so you can always reach out to our team. If you just click send us a message and then help or news or sales, whatever you want. Or you can reach out to me at jonathan@benzinga.com or 313-488-0294. I'm posting that in there as well. And so just a little bit more about where you can find these trades. Right here I have the chat tool open. You would open it up with this chat icon. Just click on the icon, or close chat, open chat. You can make it wider to make it easier to read. And right here, you can see what Anne-Marie just posted. In real time here, we can see just what we were talking about, right? Moving averages at the downward to flat tell us that bounce will find selling pressure. Closing trade alert on Tesla. This was the original trade. And then today's trade, we're going to keep the short call spread for a little while longer while we close the long put spread. Did I read all that correctly, Anne-Marie?
Yes, you sure did.
So long put spread close. And then originally the short call spread, we're going to keep that open because there's a lot of time left on the clock and we can still make more money there, right? So anyways, make sure you click on the Anne-Marie Band trades and you can see where she posts the buy to open, sell to open, buy to close, sell to close, or you can also use the ideas tool. So I'm going to open up the ideas tool here, and you'll see there are ideas from other Benzinga staff members as well as Anne-Marie. So right here is Anne-Marie's trade from Tesla, her original trade with the 385 credit, 393 debit. So you opened that almost for free because the credit and debit almost even each other out. And you have other experts from Benzinga here. So you have Gianni. He does some of our momentum swing trading, and he's giving you, price targets and stop losses here. Matt Maley does our stock picks newsletter. So these aren't the full 15-minute videos that they do for their newsletter subscribers, but it is a very concrete trade idea with a price target, with a stop loss, with a thesis that you can use to help improve your trading. So all of that is included with the essential plan. And you can get started today for $47 for your first month for a Memorial Day sale, or reach out to me directly. No, and by the way, just so everybody knows, it's normally $177 a month or $1,404 for the year. And yeah, if you do that 47, it won't renew at the 177. It'll renew at $97 a month. So really, really good opportunity to start learning and make money at the same time. How are we doing here, Anne-Marie? Still working on the trade?
Oh yeah. What I'm trying to do is take a peek at the edge of the afternoon to see if there's anything shaping up, so that maybe we can find something, but see. Hang on.
Awesome. And feel free to interrupt me at any
Oh
time.
yeah.
But,
Sure.
But you could see that I was just using the charting tool. Well, it's actually inside the details tool on Benzinga Pro, because like I said, I got into this wheat trade, and like Esther was asking, I think I missed a little bit of that trade, but I said, you know what? It's 80 cents instead of 75 cents. I still believe in this longer swing trade. So then you could see I was just taking a look at this upward trend and saying, where do I think this is going to end up by October? So there's a lot that you can do here with the charts on Benzinga Pro. You can map out horizontal lines for support and resistance levels. You can add indicators as well. Like today we're talking about the moving averages. So you can add all of those on Benzinga Pro as well. Although I use Thinkorswim as a brokerage. I'm not necessarily recommending it, but I do use it, just like Anne-Marie was using it as well. But you can use pretty much any brokerage with Benzinga Pro. and you can link your brokerage portfolio. So definitely check that out. You could link your brokerage portfolio, and that way it automatically imports your portfolio as an active watch list. That way you can get news alerts on the stocks in your brokerage portfolio. You can and use it to filter your scanner, your calendar tool. It really comes in handy. Let's see here. Let's see. Oh, Hikinashi. Is that? I think that is a type of candle, right? Um, yeah. So you can change the candle style right here within the within the chart in the upper left corner. If you click on
I
that.
want, sorry, I want to interrupt.
Mm-hmm.
Um, for the person looking at the Hikinashi candles, remember, your goal is not to see flattened data. Your goal is to look at data with all its noise and then mentally flatten it yourself. For me personally, I think Hikinashi candlesticks are not great because every technical indicator that's built looking at Hikinashi candles give you a total flattening of data that when it matters, you're going to get the wrong signal. And so he's going to go ahead and show you how to get those. I would say they look nice and pretty, and they go, hey, that one tells me I need to be short. That one tells me I need to be long. The two things that it doesn't tell that makes it supremely important is what kind of formation is this? Is it likely to reverse? And if it doesn't reverse and it still goes in my direction, how much risk am I opening by taking this position right here? So just one professional's opinion on the Hikinashi candlesticks. They're great for coffee talk. They're terrible for execution because literally the price points you get from a Hikinashi might be a number that never even printed in the broad market. So just my take. All right. So here is the trade that I just put on.
Should I stop sharing my screen?
No, you can go to. Let me take a snapshot of it, and then I'll pop it up and over. Hang on.
Or are you talking about the one that you just posted?
No, I'm talking about the newest live event. I found one that I'm very happy to take.
Awesome.
Okay, it's got a 1 to 4, and I'm going to add to it as it expands. So here it is, and we won't feel the old bait and switch. I was going to do this anyway. Well, it just fell right off of my radar as I was talking, and so it is the DBA trade, and I've been eyeballing this one for a while. Now we can open the son of a gun. Goodbye. Stop. My Refinitiv is trying to open, and I do not understand why. Okay. So if we give, for heaven's sakes, Brad. All right, I'm going to have to send you a. Oh no, you've had my face on the screen.
Sorry.
I know the faces that I make. Things are going badly.
How concentrated, how much Anne-Marie concentrates.
Okay, so let me see what's happening right now is my Refinitiv is not shutting. I have a platform that is behaving badly, and I don't understand what's happening.
It's all right. I could,
Document.
let's see here until you're ready.
Okay.
I'll just
Yeah.
share
Open
this
my
again.
task manager and let's see if we can get this.
So just
So,
to repeat here, Anne-Marie's looking at DBA. That I believe that's
yes,
what
I
she's looking
same
to do.
October. Same October. We're going to choose the 23 to 25 calls. And it's going to cost us 58 cents. I bought 5. So it's got a delta of 93 already, which is really significant for an October delta to be that far. So let me share the screen. Share screen. Okay. So here it is. We've got 5 of them. It's the 21 October expiration, the 23 calls we bought, the 25 calls we've sold, and I just paid $58 for each one of them, right? So I've got about $286 at risk. The reward event is going to be about 3 to 1, right? Because it's a $2 spread right here. My goal is if we see a nice shake and a big fade, and this comes in to say 40, I'm going to add 10 more of them, simply because I really believe in the soft commodity sector. And I think it's going to be a very, very lucrative trade event. I like the hard commodity sector. We're going to be moving back to it as soon as it stabilizes a little bit. But I think that stuff's kind of moving because the dollar is moving and we want to give it a little bit of room to jiggle out. But this stuff is going to continue to go to the upside. So fulfilled here's the live trade. So we've got that going. We are going to add to it. Now what I'm going to do is I'm going to stop the share. I'm going to say bye-bye. And now I'm going to have to document, because I document everything that I work on to make sure that everybody gets everything and that I have a perfect record of everything moving along in terms of what time, where, when, how, and so on and so forth. All right,
Absolutely.
so I'll leave you. Go ahead.
So this will be in Benzinga Pro in a few minutes.
Yes,
here, then?
it's going there right now.
Awesome. So yeah, well then we won't keep you. Thank you for being
All
so
right.
generous with your time. We'll see you Thursday.
Yes.
For our next session.
Same bat time, same bat channel. That's right.
And yeah, I'll stick around here to answer additional questions. But thanks again, Anne-Marie.
You're welcome. You're welcome. See you soon.
All right. So right now, what she's taken is DBA spread, and to be honest, I couldn't see that very well, but it looks like $23 and $25 strike prices there. And overall, just the thesis here, this is more of a macro thesis on soft commodities. So of course, Anne-Marie's looking at the charts and believes that those will continue to go up, but there's also just the overall what's going on in the world with suppliers of those soft commodities and the continued demand. So all of these little building blocks just kind of come together, and then you can structure it with a spread so that you can control more shares without paying for all of it, and then also reduce your cost of entering the trade. Yeah, Joni was helping me out there. Thanks, Joni. Buy the $23 calls with October 21st expiration. Sell the $25 calls with 21st October expiration. And I'll share my screen again here on Benzinga Pro. No, I want to share, not end the webinar. There we go. So it's right here. It looks like, all right, that was closing the spread still on Tesla, but you should see it right here soon in the chat room with Anne-Marie, and then you would also see it on the ideas tool. So she posts it in 2 different places for all of you. So right now, definitely sign up using this code right here, $47 for your first month, or contact me for a good deal on the annual. I can get you like 40 or 45% off the whole year instead of just the first month. So that's the code. Put that into both of the chat rooms here. Yeah, Robert, that is a vertical spread. So a vertical spread is where it's the same expiration date, but then different strike prices. So yeah, same expiration date, different strike prices. Throwing the code in there, and I'm going to give all of you my direct contact info. So if you have any other questions about the program, about Benzinga Pro, about Anne-Marie's trades, you can contact me directly with my email and phone number here, throwing those into the chat. And then I have a whole team of people like Joni, who's got my back. She was in the chat here as well. So any of us would be happy to help all of you out. Okay, so it looks like we've got a few minutes left here, but just to recap what we covered today. Basically, along with all these tools on Benzinga Pro, the news, the scanners, these professional grade tools that people like Anne-Marie use for research and for real-time trading, now you also get picks from Anne-Marie. And right there, we have the opening trade alert. So right there, opening trade alert, DBA, buy to open. She bought 5 contracts at $23. She sold 5 contracts at $25 for a 58-cent debit each. So if you do that many contracts, just multiply that times 5. And notice how she does say stop at 20 cents, target at 100%, or $1.16. So yeah, that simple, easy peasy. You would just check that out. Check out the chart. I'll zoom out again here. And so I could just open up the details tool, go to DBA, and then to actually execute the trade, you need to use your brokerage. I also use, it took me a little bit to figure out, but I do use Thinkorswim's mobile app. So actually, like right now, I'm just going to go ahead and execute this trade myself. Yeah, Dana, let me throw that into the chat for YouTube. Let's see here. This isn't the, actually I'll trade it from Benzinga Pro. Let's see, Control V. All right, so it's not going to be as pretty there. Actually, the way that Joni wrote it is better for YouTube. So keep in mind, you do have to assume all risk with trades. So this is for educational purposes, but Anne-Marie is nice enough to share her research with us, and there's a reason why a lot of these do work. So you can lose money. There's always investment risk, but hopefully this helped all of you today in terms of learning how to trade. And then join Benzinga Pro, and you get to follow along and make money with us along the way. Dana, let me know if that gave you what you needed with those trades. The code is available through Memorial Day, anonymous. It's available through Memorial Day, but just use it today. Then you'll have access. There's a 7-day money back guarantee too. So if you don't like it, we'll give you 100% of your money back within 7 days. Don, the Bloomberg comment. What Anne-Marie, I forwarded a newsletter to Anne-Marie. It's actually for our options school. Everyone that's a part of our options school, if I go to benzinga.com/school, Chris Capri is our educator for the Benzinga Options School. And basically he publishes a weekly newsletter on options flow. So I was like, hey, Anne Marie, check this out. So that's what she pulled up earlier. And it was some fairly technical, not crazy technical, but it was just explaining how people were unwinding their deep in the money put options. And that makes a difference for where the price is going to go. But that was our options flow newsletter from Chris Capri. That's a different product, but if you want a more structured curriculum on learning how to trade options, just let me know. And it's kind of like a college course, but it lasts a whole year, and he has live classes every day. Art, yeah, everyone who registered for this session will receive a recording, or feel free to shoot me an email and I can get that to you as well. Kingsford, awesome. Glad this was helpful for you. Hey, and to all the beginners out there, I know it's overwhelming, right? There's so much new terminology. We do have a great video library on our help site. So once you're in Benzinga Pro, you've got the question mark in the upper right corner here. You can click on that. And then if you go down here, the options mentorship program is actually separate. Anne Marie's trades come with the essential plan, so you don't have to really pay extra for it. But right here, what type of trade is best, when to book or set a stop loss, call options, definitions and uses, what is a spread. So these recordings were made by Nick Shaheen, one of our other educators, but that's a great place to look for some more info on these types of trades. John, the schools, we have our normal Benzinga Trading School and the Benzinga Option School. Those are both on a rolling basis, so you don't have to wait for a semester to start. They rotate through 8 main lessons and then apply those lessons to the real market every day. So the real meat of what you're paying for is the application, finding real trades, being able to talk with a mentor on a daily basis, that type of thing. We also have a Memorial Day sale on the schools. So I think I can get you about 70% off of the schools. Normally that runs about $4,000 for the year. I think we have a promotion going on for around
one.
Oh, and there is
430.
there's Chris talking in my headset. So somewhere around the $1,700 level is where that would be for the option school. But so let me know if you need more info on that. Let's see here. Email for the recording. Robert, yeah, just email me, Robert, at jonathan@benzinga.com. And I will get that to you. But if the fact that you're in Zoom means that you registered, so you should get it. Naski, how many times per week is Anne Marie? She was in Hawaii for the past few weeks, so we didn't do as many webinars, but we should do about 2 of these per week. And then normally she does a couple trades per day when she's not on vacation. So you can expect a lot more of these trades inside of her chat room, a lot more shorter term trades, and then a few swing trades sprinkled in, like some of these swing trades expiring in July or October as well. Great question. Do you have an extensive course for technicals? Technical analysis is a part of the Benzinga Trading School. So let's see if this will switch over here to the trading school. I think I have to refresh this. But basically, this is with Mark Petrino. So he focuses on levels. If I go to the video library, so all of those classes are recorded. And so he covers levels, chart patterns, all the basic technical stuff that you got to know in order to trade stocks. and then building a trading thesis, trading plan, all of that. It looks like my computer is mad at me for trying to load too many things right now. Let's see if, no, it didn't. It didn't like me there. It's probably because I have like 16 different programs going. But yeah, the trading school is the best place on Benzinga to learn technicals. Or, anyways, uh, there's a lot of different ways to learn with Benzinga. But Anne Marie, all of her trades are included with the essential plan on Benzinga Pro. And just getting rid of these spammers on YouTube. Let's see here. Awesome, John. Yeah, if you're on YouTube, here I'll just post my my contact info is in the description on YouTube, but I'll just post it here again. So if you guys have any other questions on any of this stuff, Anne Marie's trades, trading schools, you name it, we do all sorts of stuff here at Benzinga, and it's all about empowering you as a trader, whether you're a beginner, a veteran. I just try to point people in the right direction, whatever is going to make you more money and help everybody to succeed. Yeah, Pepe, in terms of accessing the trading school, just shoot me an email, jonathan@benzinga.com, and I can set that up for you. Antonio, what's the difference between Anne Marie and the options mentorship tier? So let me just bring this down here. You guys should be able to see that. So the difference is, well, actually, I can show you this on Benzinga Pro. What's the difference between the essential plan with Anne Marie and the options mentorship? So Anne Marie is amazing. However, she has a lot of other things going on in life, and she doesn't share a live stream 8 to 9 hours a day. So she's not trading all day. She's giving you trade alerts that are well researched, and she's using her own money to make those trades. That's the guarantee you have from us. And then she does a couple webinars a week like this with me. So that's good, right? You don't have to pay extra for that. It's included in the essential plan. With the options mentorship, it's a different chat room with a guy, Nick Shaheen. If you've been around YouTube with Benzinga long enough, you've seen me do some webinars with him. And he does a 2 to 2.5 hour charting session every Sunday morning. Let's see, it's Monday, so it shouldn't be too hard to find this actually. I'll watch the video here. I have to scroll up a little bit. Friday. Whole strategy in the video. All right, so basically he's posting a swing trade here. He does sell a lot of credit put spreads or bull put spreads, but then he also has a live trading link that you can log into every day. So he's calling out day trades, and he makes a few different swing trade picks a day. Here we go, the Sunday video. So he has this 2 to 2.5 hour charting session, and you have a spreadsheet with all of his charts, all of his notes, and if he does think that a trade is likely, then he'll tell you how to structure it as well. So if I'm curious about Google, I can click into this, see what Nick thinks about it with his support and resistance levels, and then also reference his notes here. And breakdown with markets has more to fall before official targets met. Will follow markets. So basically, Nick is an excellent trader. He'll teach you how to analyze stocks with those. This is another great way to learn technical analysis, just from the sheer number of charts that he goes through each week. And then you can also trade live with him every day through his live trading links. So again, all of that content is on the options mentorship plan And then that would also include everything with the essential plan, including including Anne Marie Band's trades. Great question. Are his courses theoretical, or can we follow real life? Oh, it's real life. I mean, it's if you're asking Nasky, if you're asking about the options mentorship, like he's actually trading. He'll tell, and he doesn't take all of his trade recommendations, but he'll tell you. He'll be like, hey, because some of them are shorter term. So he doesn't always take every day trade because he gets distracted with people's questions. You'll see if you log into the live session, there's like 300 people in there, but he'll tell you, hey, like, I'm not going to take this personally, but if you want to get in, here's a good level too, that type of thing. Yeah. Antonio, do we get Nick and Matt or just one of them? Matt Maley has a different product with Benzinga, Benzinga stock picks. He's not on Benzinga Pro. He's excellent with longer term stock picks from like 3 months to 2 years. I'll just go there really quick. Benzinga.com/premium ideas. So there's a separate website for our newsletter products, and looks like they're doing some webinars too. So anyways, we have a bunch of different educators, right? So I don't want to overwhelm you guys, but Nick also has his inner circle chat room. He has picks like this with Coterra Energy, Amazon, Salesforce. So if I clicked into these, it would give the full write-up with each one of those. And then he has his inner circle chat room on here, but that doesn't come with Benzinga Pro. So I have to get off of here soon. Actually, they're probably going to kick me out because Rodrigo has to start his, I think he has a webinar with someone else here today. But let me know if you have any questions. I'd be happy to just point you in the right direction. Anne Marie is amazing, and that's all included with Benzinga Pro. I hope this has been helpful for all of you today, and it's what we're all about here at Benzinga: just making more money, learning, advancing in our trading journey. Thanks, William. Yeah, Matt's coming on at 5. So if you're interested in Matt Maley, that's a separate product, but he's great. He'll be on here in about 5 minutes. All right, everyone, I'm going to get out of here. Shoot me an email, give me a call, and we will